Thank you for that introduction. And we'll go to you, Annette. Kindly give us a brief introduction of yourself and what you do at Ngao Credit.
Thank you so much, Claire, and good evening, listeners. Claire. My name is Annette Mukaminyaga. I'm the head of business.
Claire, and good evening, listeners, and everyone that is online with us. My name is Denquinta Owido. I am a senior credit analyst.
Please feel free to write them at the bottom right of this space, and we will sample them as we go along. So if you have any questions, question in hand, and be ready to ask it towards the tail end of this space. Then also, if you have any questions or comments, do make sure there is good debt and bad debt. And I want us to unpack that before we can tell when should we be borrowing, when is it not wise to borrow. Let's unpack what is good debt and bad debt. And I'll give that question to you, Wycliffe. Kindly unpack for us what is good debt and what is bad debt.
Thank you. Good debt and bad debts. Good debt, I will talk about good debt from two perspectives. I will talk about it from the perspective of a borrower, like I am a client to an institution. And I would also like to look at it from like a lender, like Ngao, what is good debt and what is bad debt. So I would start like as a client. A good debt, you look at it as what is the need for the debt? What problem are we trying to solve, or what need do we have? So people borrow for various needs. For instance, you got an emergency and you want to borrow. You maybe you have school fees to pay, you gotta borrow. Or you cannot meet your current, like maybe expenditure as a person. So the need would then determine what is good or bad. Because, secondly, you would also look at it maybe as are you able to service the debt? So I'd add those 2 points, the need for the debt and are you ability to service the debt. If you're unable to service the debt, if the need is good, that would be bad debt for you. Because then it will constrain you and you know the consequences of not being able to service your loan or to service the debt that you've taken. That would be a bad debt for you. A good debt would mean that you've taken this debt to grow yourself or to invest in business, then it has ability to repay itself. That would be good debt. But I would not restrict it to that, because I know somebody would say, but morally, what if you have like an emergency? Is it a good or bad debt? Maybe you have somebody who is sick. Then that would also, I would not go into that debate of the moral sense of it. So basically, I would say that is good or bad debt. But if you look at it from a lender's perspective, somebody like, let's say you as a person, you are giving somebody your money. It is now bad debt if they're not able to pay it. And I also look at it as an institution. If somebody borrows from me and they're not able to pay it, that is bad debt, because probably you are also borrowing to lend. Then you are not able to service that. That would be bad debt. So I would look at it at that, but maybe I'll allow somebody to chip in the debate on the same. But that's my perspective.
Thank you for that. So think about whether you're able to service that loan. As you said, there is that debate, like if there's an emergency, but generally before taking out a loan, ask yourself, will I be able to service that loan? And then comes the issue of thinking about the payments you'll be making monthly or whenever the payment period is. So thanks for that. I don't know if anyone else wants to chip in on what makes bad and good debt.
Yes, Claire, I would like to chip in and just weighing in and mention that good debts, they are not rushed, because you find instances where somebody just needs money and because they have the opportunity, they just rush the borrowing. So it's always good to understand that there's always some level of risk that comes in when borrowing. So if it's a good debt, you need to think about it. You need to think about where you're going to put that investment or that money that you're borrowing. Otherwise, if you do not do that, then it ends up being a bad debt.
Thanks for that, Annette. I think what you've said is very important. Anything that is rushed is usually troublesome. So if you have to rush yourself, think twice. They always say before making a decision, don't make a decision when you're rushed or when you're angry or too happy. Any extreme, then it's usually very tricky. Now, I'd like us to talk a little bit about taking a personal loan versus a business loan, first of all. When will you sit down and say, okay, I'm looking at my business, probably I want to expand to this level in the next 2 to 3 years, whether it's long-term, short-term, medium-term, and I think to scale up, I need a loan. How do you go about deciding, first of all, that it's time for my business to take a loan? And then second, how much I should be taking? Because sometimes you think, how much can I take? I can take the most, but then are you able to service that amount? So before you sit down and take that loan, what are we supposed to be considering as a business first?
Thank you so much, Claire. That's a very good question. And it's important for everyone to remember that taking out a loan always involves some level of risk. I think I've mentioned that. So when taking a loan, it's important that you assess your ability to repay that loan. And this, you need to look into the perspectives of things like the interest, the fees that are involved, and also ensure that the loan that you're taking or the money that you're taking is aligned to the business strategy and the goal that you intend to achieve. So in this case, you would find yourself, or instances that you take a business loan is if you need to start a new business or you need to expand your business. And in this case, if you're looking to expand your business, you may need to take out a loan to cover the cost of maybe the hiring, the opening of the new locations, or investing in a new equipment and technology. That is very important. Again, is if you have to manage your cash flow, because in businesses, of course, it's very expensive. So there are instances where you need more cash to push or to pump your business. And in this case, a temporary cash flow crunch can, of course, affect your business. And in that case, you might find yourself needing to borrow some cash. Investing in new opportunities, that's something else that one would look into when they need to take a business loan. And also, I find most of the business people, like the ones I personally assist, are wanting to consolidate their debts, because you find maybe you've taken some facility with a bank or even a SACCO or even a microfinance institution. And all those debts, they put you into a limit that maybe you're not able to push yourself further. So you need to consolidate these funds or these loans so that it becomes easier to make the installments a bit manageable. So I would say those are some of the considerations that one would need to put into perspective anytime they're taking out a facility or a loan.
Okay, thank you for that. And I like that you've mentioned about that consolidation, which someone should factor in as well. And then let's talk about personal loans, because this can be a little bit controversial sometimes. Is it wrong if I want to go for a holiday, for example, I've been working hard and then I'm thinking, December, I want to be able to go to Diani or to Mombasa or wherever or out of the country. Is it wise to take out a loan? And how should I go about it? What should I consider before going to take a personal loan, or for any other issue that I may be facing? If it's a holiday, if it's a personal issue that I want to sort out, what are the things that I should be taking into consideration before taking out a personal loan so that I'm doing that wisely? Annette.
Quite interesting. Clearly, there's no wrong time to take a loan. And I think everybody, even in this space, everybody needs money. So how you plan for that money is what really matters. So if you're planning to take a loan to go on a holiday, you need to think about it. But I would be more specific on some of the reasons that one would really go for a personal loan, like instances where you need to meet some emergency expenses. If you have an expected expense such as medical, or maybe you need to do some repairs of your home, that would warrant you to take a personal loan. Other cases would be major purchases, like in the case of Go Credit, where we finance customers to purchase motor vehicles. That would also be a very good opportunity for you to take a personal loan because it's an asset that you're adding to yourself. Investment opportunities. I have seen people taking loans to invest, buy shares, which is very good. And I think that is one of the aspects that most people don't put into perspective when they're borrowing. And I admire the kind of people that take loans to invest. So if you're taking a loan to take a holiday, Claire, I would give an example of you're taking a loan to buy a vehicle, or you're taking a loan to expand your business, and another person is taking a loan to go on holiday, then that holiday does not work out in a few months. And then maybe the factors you put into place at the point you're taking that personal loan, then you ought to have considered and put that into a lot of consideration into how it's going to help you. So yes, taking a personal loan is okay, but one needs to really think about it.
Okay, thank you for that. The thing that I'm hearing coming out very clearly is that you must think through this. Don't just do things abruptly. You must think through it. So before you take a loan is okay, but think through it before going to take that loan. Now, you've already mentioned some of the questions, my next question, the answers to some of my next question, which is money instantly and you're in a rush. What are the instances? Is it unadvisable to take out a loan? And I'll direct that question probably to Wycliffe, and then we can go around getting other feedback on that.
It's interesting that you are talking about taking a loan to go to Diani, and most people have asked me, like, it's actually purely wrong to take a loan to go and enjoy yourself. It's just like, but how much are you paying for the loan? Because if let's say the loan is the interest rate we're talking about interest rate of maybe 2% per annum. Why not? Why not? But that would be wishful thinking to talk about 2% per annum. But to answer you clearly, it would, when you're taking a loan, one of the most important things you have to look at is repayment. Because when you take the loan, when you take some money, you put your word that I will be able to pay back the loan. That is something that most people, taking a loan is very easy. I remember when I used to sell for a bank, and I would go to these institutions. I wouldn't want to mention them because maybe they'll come after me. But I would go as a sales agent. I would go to these places. Mostly there were people who were working for government. And somebody doesn't have a need for the loan. And you could see that there's a space in their pay slip. And they'll tell me, put something on it. And I would give people money just for the sake of having money. That is not the right way of taking a loan. And that is something that most people do not put into account. So you deny yourself an opportunity to take real money and invest it in real things. Now, there is a whole sector that people don't talk about, and I know maybe later we'll talk about it, the space where we are in as Ngao. Where we are in, this is where we see a lot of real tangible reasons for lending. When somebody has got, let's say, something that has pushed them too much to ask for money. But if it doesn't push you and it doesn't bring in revenue back to you, I think you shouldn't borrow. That is it, Claire. You shouldn't borrow.
Okay, I think that is very, very good. If it doesn't bring value back to you, then you simply shouldn't borrow. Annette, do you have anything to add on to that when you shouldn't take that loan?
Yes, definitely, I do. Definitely, when you're borrowing, it's always good to do your research well, because lenders are there and everybody is looking out to make some business out of it. So you need to weigh in and find out what are the rates, what are the charges of every loan that you're taking from the different institutions that different people patronize, because some of these charges can be crazy. And I think my colleague has put into that, because again, what loan facility that you're taking, and that will also put into a lot of weight on the repayment that you're making on a monthly basis. Then you also need to look into issues. Maybe you're already in a debt where you again borrowing and it's already too heavy for you. So taking out a loan when you already have debt that you need to meet, and you think that this is going to meet your financial needs, it puts you into a very awkward situation. It's very important to focus on paying off the existing debt that you already have before you can take a new debt. Then if you're taking money for non-essential items, if you're considering taking out a loan for items such as some designer items, I know ladies are highly affected by on this. You need to think about it, because it's better to save up for some of these items and wait until you can be able to afford them without having to necessarily borrow from the banks.
Okay, thank you for that. Yeah. Thank you for that. Now I want us then to discuss after that, if I already have debt, how do I know that I have too much debt and I shouldn't be taking up even more debt? And I'll direct that question first to Wycliffe, and then I'd like Dan also to chip in that conversation. How do I know that this is too much debt? So I have a loan here, a loan there. As Annette said, that maybe you've seen some designer thing and you're thinking, why not spoil myself? How do I know that now I've reached my threshold and I shouldn't be taking out another loan? Wycliffe.
Yeah, thank you. There is like people like Dan would tell you, you have to remain with at least a third of your income. When as a lender, when I want to give somebody like a facility, scientifically we would look at it and like, how much do they have in income? If I put my installment in their income, would they be able to service it? Now, I would take that to look at from the other side. Like for me as Wycliffe Oyere is borrowing money. When do I know that this is now too much? One, it's very simple. If I am not able to survive or to meet my needs as an individual unless I borrow. So I get my revenue, I get my income, but I'm not able to meet my expenses without borrowing. So I am in that loop where I borrow to borrow. I pay, I borrow, I pay, I borrow. That is a cycle that is a little bit unsustainable. Now, for a business, if you're running a business and you're struggling on cash flows, not that you have gaps. Look at it that maybe you have gaps in your cash flows, deficit that you're not able to meet. Then you have to keep borrowing to meet them, and you have to keep borrowing to stay afloat. Then maybe you are in too much debt. There has to be a sustainable plan where you can be able to survive. Yes, I don't think it's also bad to borrow, but when you cannot be able to stay afloat without borrowing, I would say you are in too much debt, both as an individual and as a business. Yes.
Okay, thanks for that. I think that's a very important point. If you find that now you have to keep on borrowing to sustain yourself, borrowing after borrowing, then that's a red flag. So you must ask yourself, do you really need that money or do you just want the money? I think that's a very relevant point. And then I'd like to rope you in on that as well. What other factors should you consider to determine whether you have too much debt or you still can borrow and be able to meet your obligations properly?
Thank you, Claire, for the question. And I'm just going to reiterate whatever Wycliffe has just said. When you find yourself on a limit whereby right now in Kenya, we normally say all you have to do is fuliza, fuliza, fuliza. There you do not have nothing that is coming in, no cash flow coming in. All you're doing is using whatever resources that you're having at the moment, exhausting even the savings that you're having. At that bit, you will know that what you're doing is getting into debt day in, day out.
Okay, thanks for that. Okay, so maybe I have sat down and I have decided and established that, okay, I think I can manage taking out a loan. And so I want to take out that loan, whether it's for business or for personal purposes. Now, how will I go about managing the loan? Walk me through this step by step then. So let's say my business has reached a certain point, and now I think to take it to the next level, I'll need to borrow X and X amount. So how do I go about now going to get that loan and then making sure that I'm able to manage it sustainably? So I'm able to meet my monthly obligations and still run my business properly. Take us through that process.
Okay, thank you, Claire. Actually, I'd advise first and foremost, before you take a loan, you need to understand the terms and conditions of the loan that you're getting into. You need to understand what is the interest rate that the financier has, what repayment schedule do they have, and is there any charges that is there? Are you going to pay for any legal fee in case of anything? Are there any late payments, any penalty? But above and beyond, you need to understand your repayment schedule. This is something that you're going to pay either at the end of the month or at the end of the year, depending with the interest rate that you have agreed on with your financier. Having that in mind, you have to track your expenses. You need to know, I am earning maybe 100,000 a month. I have bills to pay. I have school fees to pay. With all this in mind, whatever is going to remain, it has to cater for your monthly repayments that you're going to service to the financier that you have gotten a partner with. During this time, you also need to try and avoid overspending, because once you overspend, maybe you're dining out, entertainment is there, it's going to put a bit of pressure on your income because your income is not changing. And already you've introduced a financial obligation of paying your financier the loan that you've taken. In addition to that, you can try and make your repayments on time so as to avoid either late penalties or late fees or legal fees, depending on the terms and the conditions you had signed with the financier that you had onboarded with you. And also, if you're struggling, you should try and communicate with the financier or the lender so that either you can reschedule your repayments to a certain date that you're comfortable of repaying, or you can restructure your facility, you increase the loan term, and the installments might be lower. And that's where I'll come in and say, in case you're struggling with your debt management, there's a link below. You can click, and our financial advisors will come in and assist you on that. Thank you, Claire.
Thank you for that. There is a link on top of this page where you can go to the Ngao page and they can direct you further on that. And I like what you have said, that in case you find yourself in a tricky situation and you're unable to meet your obligations, you must communicate, because if you don't communicate, then it sends a bad picture and no one can help you. So if you're finding yourself unable to pay, you better just speak up, and then maybe you'll find a way to reschedule the payments. It's better than keeping quiet and accumulating penalty fees and whatnot and just destroying that relationship. So I think that's very important to note. Now, I'd like us to talk a little bit about choosing the lender. We need to know that legal aspect of it. And I'd like to rope in Sharon at this point. Ngao Credit is regulated by the CBK. There's usually some argument about regulated versus unregulated and the importance of really dealing with regulated institutions. So tell us what that means to be regulated by the Central Bank of Kenya. What does that mean for this borrower who's coming in seeking funds, and how does it really make them be in a better position dealing with a regulated lender? Sharon.
Thank you so much, Claire. Being regulated, number one, requires us to adhere to a certain code of conduct and maintaining high ethical standards when running our business. This means strict adherence to Article 31 of the Constitution, which basically talks about privacy. And this is in liaison with Section 25 and 26 of the Data Protection Act, which outlines the principles of data protection and the rights of a data subject. So by being regulated, again, this means that a more professional way of running our business, because we have senior managers and directors being vetted by CBK. When you look at this again, being regulated, of course, sets us a notch higher from the unregulated firms, which creates more confidence to our clients, which ends up reducing both reputational and strategic risks. Being regulated, again, Claire and our listeners, imposes on us to have robust systems of internal controls, policies, and procedures which guide our day-to-day running of the business. So basically, when you're regulated as a firm, it gives you that confidence. Our customers having confidence to work with Ngao Credit, because at the end of the day, there's a certain code of conduct that we are supposed to work within, and this sets us a notch higher than the unregulated firms.
Okay, thank you so much for that. I think it's important for people to note that it's important to deal with a regulated firm. And then now that you're regulated, as you've said, you are adhering to certain laws. How does this now protect the person who is coming to borrow funds? How does it make that person better off than a person who is seeking funds from an unregulated lender? Sharon.
So at Ngao, Claire, we've ensured that privacy and data protection, and in compliance with the Constitution and the data protection, we've set up a data protection office, and also having been registered as data controllers and data processors, we've gone ahead to set up as I've mentioned, a data protection office with a data protection officer who ensures that we are compliant with these laws. And then how do we ensure that how then do we ensure that privacy and data protection is adhered to? Number one, we only share our clients' information with relevant and authorized stakeholders. What do I mean? In our organization, we are more than 150 employees. So there's no way a person in the administration, let's say the cleaners and all that, will have access to our clients' information when they're not dealing directly with these clients. This information we've we only share this information with only the relevant teams, so that we are not also set policies in place. In this case, a need to know access control policy, which only allows users to get access to information they are looking for. We've also ensured that any stakeholder holding clients' information, be it on their I've set strong passwords that require not go ahead to ask so much information about your spouse when your spouse is basically not getting into an agreement with us. So get like 500,000. There's no way we will impose on you to get a loan that is 1 million Kenya shillings, and knowing very well that when you look at your KYC documents, you're actually not going to be able to pay these loans. Number 3, again, Ngao Credit, we have an open door policy where we allow our clients to come in should they have any grievances. And we've set up a team through our customer service department that addresses these complaints and grievances. So at no point will you walk into Ngao Credit and actually have a grievance or have a complaint and go out when you've not been sorted. So this is how we ensure that we're covering our clients. Number 4, as an organization also, we've strived to be as transparent as possible to our clients by offering non-ambiguous terms and conditions in our agreements, purely English, no French, no Latin. Like, you'll actually come to our organization, read the terms and conditions. They are clear, they're straightforward, and any person, any layman reading through them will actually understand and comprehend. Lastly, we have given our clients a chance to always get an independent legal advice prior signing our loan agreements. And in instances where, of course, not everyone will be able to get the legal advice or get a hold of lawyers outside, we explain to you what you're getting yourself into. Clauses that are not clear to you will help you understand. Should you have any questions, we'll actually go ahead to help you understand. Back to you, Claire.
Okay, thank you so much for that. You've given a number of very, very good points. And I like that point about data privacy and protection, because this is always a point of concern for many people. People are thinking, okay, how will my data be used? Is it safe? So it's good that you've given that assurance that once you give that information, you will not misuse it or give it out to people who are not involved in the whole process legally. So I think that's a very good assurance there. And then I like the point that you also said about putting the terms of the contract in plain English, because, you know, you always hear about read the fine print and be explained to what the contract really entails. So that element of customer service is very, very important, and getting your own advice, your own legal advice, if you can get it. So I think those are very important points, which are really reassuring before taking out a loan. Now, I'd like us to go and speak a little bit about how to know that you have gotten a good deal. I remember at the beginning of this space, Wycliffe, you mentioned that if you get a loan for 2%, which you will not get, but how do I know that what I am borrowing it's a good deal? It's something that I can, use. I remember, Wycliffe, you said maybe you can borrow it to invest, whether it's in shares or in bonds or whatever it is. How do I know that the loan that I am getting, my repayment will be okay enough for me to, let's say, invest if I'm taking that route of investing? So tell us these points we should look out for. This is a good deal. And then which ones should we be looking for out? Good deal after all.
Okay. I've just listened to Sharon. The wakili in her could not stop it. That's very funny. Now, when you're looking at a loan, now I've looked at I always speak as a consumer, because a very big role in me is a consumer. I consume loans. I borrow loans for investment, and I've also borrowed loan to survive. So today, if you look at even the space where Ngao Credit is, there is a lot of borrowing. And a good deal would mean to me, maybe, is it the speed that you're looking for? How fast do you want the loan? Because the opportunity, they call it the opportunity cost of borrowing. That is a whole debate there. But if you want a loan, let's say you want a loan, instant loan, there are instant loans that we consume, the mobile loans and everything else. The speed could be a good deal. But that is for a specific need. So, like, let's say you say, I want to go and borrow loan from Gao Credit and they give me with speed, then that's a good deal. Secondly, you'd also talk about a good deal when I don't want to talk idealistically about 2%. That would cheapen it. A good deal would be a loan that, one, there is flexible repayment terms. So they are cognizant that probably your cash flow might dip, so there is flexible repayment terms. That is a good deal. A good deal would also mean you borrow the loan at relatively affordable rates. If there are affordable rates, then you talk about a good deal. So that would be a good deal for me. So you look at it from different disbursement. So if the need is urgent, then you have good speed of disbursement. That would also talk about a good deal. Yes.
Okay, thank you for that. And, throughout this financial literacy month, we have kept on talking about personal finance is pretty personal, and also business finance is really situational. What another business is going through. So I like what you said, that for some, they need the speed of processing that loan.
Fees, because some lenders will charge you the application fees or the repayment penalties. So you need to factor in that, because again, as I said at the beginning, all these affects the amount of money that you're paying at the end of the day. Then you also need to look into your credit score. How risk are you exposing yourself? Because there might be some bad times and maybe you're not able to repay these loans. So in the event you go into default, and that happens a lot, I've seen customers that are in very good books, and I would take it back to the times of COVID, and a lot of people were affected, and they had to go back to the banks to have the banks reconsider, come to us, we do the reconsideration, maybe to extend the loan repayments. And in such instances, majority of the business people and even individuals were affected. So in that case, you need to look into the amount of money that you're borrowing. How would it affect your credit score if things went bad? Then even the loan amounts. I've seen instances where, and I think this happens a lot with most of the financial institutions, the higher amount of the money you're paying determines the interest rates, or even maybe the lesser amount you're paying, the interest rate could be low. So you also need to look into all those considerations and see, I need 300,000. Is it enough for me? Is it going to meet the need that is warranting me to borrow these funds? So if yes, stick to that. Because again, Claire, I'll be honest with you. Majority of us, if I go to Gao Credit today, for instance, and I need a facility, and maybe my need was only 300,000, and my facility can be able to cover that comfortably, and Dan tells me your facility can actually warrant you to take, or can give you up to 500,000. Because of the need of the money, I end up extending my borrowing. So my need was 300,000, but because now I've been given an opportunity of taking up to 500,000, so I deepen my borrowing. So at the end of the day, this affects me, and that is not a good deal because that is not what I initially intended to do. So you need to look at the fees. You need to look at your credit score, how it's going to be affected in future, and you also need to look again into the loan amount.
Okay, thank you for that. And you've put it really rightly. You know, sometimes you're like, okay, as you said, you've gone to borrow 300,000, then you've been assessed and it's like you can get 500,000. Then you're like, why not take that 500,000? So sometimes you get derailed. So you must really be focused on why you're taking out that loan. And if you only needed that 300,000, just have that financial discipline. And I think I've even seen in the comment section some people talking about that. And I'll sample some of those comments as we go along towards the tail end of this discussion. But I'd like to talk about some of the other blind spots that someone might miss out and should be looking out for before taking a loan. And you've mentioned some of them, Annette and Wycliffe as well. But then, could you tell us some of the other blind spots that people should be aware of? Because Sharon told us rightly that, Gao, you can sit with somebody, you go through the application, you go through the terms and conditions so you can understand. But what are some of those other things that people should be aware of that they might altogether miss? And then when they take out the loan, they realize, oops, there was this.
Oh, thank you, Claire. This is an area whereby I've realized people really struggle with it because you get that someone has an urgency or someone has an emergency, and before even thinking at whatever they're trying to do or whatever they're trying to get into, they just number one, life has made it easier whereby you can Google just an institution either via Google sites or even on any social media. You can ask questions. People will give you feedback. People will give you the experiences with that particular institution. You can get reviews even from their sites for you to know how is their customer service. Do they listen to you? Are they empathic? Do they struggling? Can they help you out? I think that's something that people have really failed doing that. Another one is most of the customers don't ask a lot of questions or even don't indulge much when they're taking a facility. All they do is look at the interest rate or they look at the overview fees, upfront deduction. They don't ask about their repayment schedules. They don't ask about if there's any penalty that is involved. They don't ask about anything. And then later on, you get that once they've taken the facility, there's either that amount that has been deducted from whatever they have applied for, or an amount that has been added on top of whatever they've applied for. So people just rushing because of the urgency or the emergency they have is normally a very big blind spot they have. Finally, there were poor planning. You're taking a loan. You're not sure how much you want. Maybe you want 200,000. You're being told your motor vehicle can fetch you $1 million. Your motor vehicle can fetch you 500. You jump into the $1 million, you jump into the 500, and yet you needed the 200,000. You had not planned on how you're going to repay the 500 or the $1 million. So there is that lack of planning, either prior taking the loan, even during the loan, how you're going to repay it, and even post the loan. After you finished the loan, you took the loan, what has it assisted you with? Did it do it purpose? So I find like those three pointers are the key factors that people normally don't think about before they take a facility. Back to you, Claire.
Thanks for that, Dene. I think what you said is very important about doing due diligence. Sometimes it's as simple as just looking up that company to find out where are they, how many offices do they have. So it's really important if you're going to take out your loan with this company, you're having a relationship. So you must understand who you're dealing with. So due diligence is always important before taking out a loan, and then just asking those questions, because, sometimes people want to do the least work, and then when things burn is when they start going back and they're like, oh my goodness, there was this and that. So understand there are various other costs that might come, and you must understand them. So don't just look at the interest rate. Oh, the interest rate looks okay to me, and you sign on. So make sure you understand the terms and conditions of a loan. If it's about penalties, if you find yourself in a situation where you're unable to pay the loan, make sure you understand what the penalties are. And as has been mentioned, make sure that you always communicate so that if you need to reschedule that loan, then it is understandable. Annette, is there any other blind spot which people should be aware of before taking out those loans?
Yes, definitely there is, Claire. If you find yourself with an agent or a loan officer or with a lender that is pressurizing you to sign up for a loan, you need to think about it, because why are they rushing you to go through signing up? Because they need to give you time to think about it, to read the fine print that you talked about, so that you understand. And as a borrower, you also need to ask as many questions as pretty much lenders is the credit analysis. There are some that will tell you because you have that one needs to think about.
Okay, thank you for that. Wycliffe, is there any other blind spot that we might have missed out that
I think the ladies have articulated that very well. But basically, it is very agree. Sometimes it just takes a minute to read through, understand. So that is the biggest blind spot, I would say, Claire.
Okay, thank you. So yes, just go through those documents. It might seem long, but it could save you a lot of problems going down the road. Now, I'd like us to talk a little bit about digital licensing. What is the future of lending following digital licensing? And I'll direct that question to you, Wycliffe. What's the future of lending?
Yes, that is very interesting that you've talked about the licensing and the future of lending. Up to until recently, and the Central Bank of Kenya decided to implement the law. This law was passed in Parliament that licensed us. I would take you back to the time when we had the capping of interest rate at the bank, and that was a very, very, very big issue. Then today we see licensing of the digital space. The whole place is too big. The definition doesn't give it its weight, because you're talking about a space that comes from mobile lenders to people who are lending. People are lending between, I can call it, between 1,000 shillings to close to 10 million shillings. That is the space, Claire, that we're talking about. That is a very huge space. So when you talk about the future, I would be overestimating myself if I could say that I can talk about the future of lending in this digital space, because the license has taken a very, very huge space. And in terms of it's a space where we disburse close to 10 billion a month. So worked like in a space without regulation for close to, GAO has been for over a decade. GAO has been operating without any regulator. There are microfinances that have been operating without any regulator for 5 years, 10 years. So when you bring in a regulator, that is a whole change. And earlier last month, I think it's last month, we met with the governor of Central Bank, and he talked about his. But what we know today is that it is very difficult to understand, because here we have people who have come in and their businesses have failed. Here we have clients who've gone through a lot of torture. We have from the issues that made this licensing true, because you could see it was cries from the social media. People were complaining, oh, these are rogue lenders, sharks, and things like that. So if you look at the complaints that it's called the Consumer Protection Authority, the complaints that they were receiving, and the complaints the central bank was receiving, that pushed Parliament to create the law that licensed us. Now, it's a good thing, because those people who do not meet, they call fit and proper, will not be licensed, and they will leave the space. So it's a good thing. Like today, I think we are one of the very few microfinances that have been licensed to operate today. So we can speak with authority and say we are ready to serve our clients with the law behind our back, so that we are fair to the client and the client is fair to us. But to predict what is going to happen, I think it's going to be interesting. And as a player in the industry, I want to sit there and watch and maybe take lessons from it. But it is something that we will wait and see. Claire.
Okay, thanks for that. Just to give a bit of context, in January, the CBK released a list of 22 digital credit providers that it has licensed. So as Wycliffe has said, it's a wait and see. It just unlocks a whole lot over there. Sharon, is there anything you'd like to add on that as well?
Yes, Claire. The feature of lending following digital licensing, number one, there will be an increase in the adoption of digital technologies. What do I mean? Nowadays, everyone, even our listeners, everyone has a smartphone. And it will be very easy for anyone wanting a facility to actually get it at the tap of a button. So with digital lending, basically is basically increasing an adoption to digital technologies where everyone is flexible from where they are to actually get a facility. And then number two, collaboration with both traditional and digital lenders. By this, I mean traditional lenders such as banks are partnering with digital lenders to expand their reach and offer more convenient and efficient loan products to their customers. So I'll actually weigh in with those two pointers. There'll be an increase in adoption of the digital technologies and collaboration between the traditional and digital lenders. Back to you.
Okay, thanks for that. There's a room for a lot of collaboration there. Now, I'd like to sample some of the comments that are streaming in. Insightful discussion. Okuyu Bernard says financial education and financial consultation should be key before someone takes a loan. Yes, very important to understand, just as our speakers have said, before you take out that loan, understand your financial position, understand how much you need to take on, understand the reason you're taking on that loan. Galuka is asking for a good deal. The agreement forms is needed to execute the action. How do you Let me sample two more. Madilu says, thanks for the information you're giving out. It's a good move indeed. And then wisely before doing that. And I think the speakers have spoken to that. You must understand your financial position and your ability to repay before taking out the loan to make sure that you're doing the right thing for you. Marube is saying, how much is paid in terms of dividends? Now this is borrowing, not SACCO, so that does not apply here. One more, someone is saying here, can I get a loan? A Redemptor, we have pinned on top of the space a link to Ngao's Twitter page where you can fill in your details and then somebody can get in touch with you and they can assess your financial situation and then advise on that. Now, Geoffrey, one more, and I think one of the panelists can answer this, maybe Annette and then Wycliffe. Geoffrey Wambua is asking, does borrowed money to invest have the same interest as borrowed money to consume? And what is the duration for the repayment? Maybe Dan, you can take that question, and then Annette and Wycliffe can add on to that. I can repeat the question. Does borrowed money to invest have the same interest as borrowed money to consume? And then how is the duration of the repayment? Dan.
Thank you, Claire. You asked borrowed money to be consumed and borrowed money to be invested.
Yes, they're asking, are they paying the same interest rate? They're borrowing for investing versus borrowing for consuming.
Yes, because if you borrow money, whatever the purpose you're going to do with the money, that is actually just up to you as an individual. It should do something that will help you make repayments on time and help you also see the positive bit of it, and whatever money that you had borrowed is assisting you to do. The duration time, it is the same, both as per investment money and as per the other one.
Okay, thank you for that. Now I'm seeing a very interesting question here from someone called Richie, and they're asking, if somebody wants to set up a business, can Ngao Credit set up the business as part of credit? So they're saying, assume that I have a business plan, but I don't want to borrow the cash. Can Ngao Credit set up the business as part of credit? I don't know if you understand that question. Annette, maybe you can help Richie to understand what Ngao can do there and what they cannot do.
The line of credit. Thank you so much. Yeah, yes, we can be able to assist Richie, of course, set up the kind of business. What we need to understand from Richie, and Richie, it's good that you're asking that question, because there's a form, there's a link shared where you can leave us with your details and we'll be able to get back to you. But all the same, depending on the kind of business that you're setting up, in our case, that is in the case of Ngao Credit, we'll request for a security that will be able to lend onto that. Then now we can be able to walk you through the journey so that, again, you don't end up getting money that is going to get lost, I would say. Let me use that for a better word. So with a motor vehicle, currently that is the kind of securities we are taking. We'll be able to assist you. If you do not have that, so with that kind of an agreement, we'll be able to take you to the next level that you want to reach.
Okay, thanks for that. I hope Richie you've understood that. And on that point of what collateral you're giving, what makes for collateral and what doesn't? You've talked about logbooks. What else can qualify for collateral and what does not qualify? Annette?
Thank you, Claire.
Okay. You can take it, then Wycliffe can add on.
No, Claire, you can. Wycliffe, you can go first.
Okay.
Thank you. Now, there is the question the listener has asked is actually it's got me thinking, because and I've liked the way Mokami has talked about the securities that Ngao Credit takes. But for me, I looked at it like this is a very awesome idea that somebody has. You designed to cater for specific needs, but we don't have a product that currently. But we like when clients talk to us like that. We would like, as an institution, investment and financing an idea like that. That is something that people do, but currently we don't do that. But we would like to encourage our listeners, as we've said about the form, we would like people to tell us what would they like to see us finance as Ngao Credit. How would they like us to partner with them? And within reason, we will take that as a challenge, and we will design products that we will start bringing in products. Question on security on the same breath. As at now, we're looking at Ngao, and I would like to maybe look at it in the traditional setup. I am a villager, so when growing up in the village, when you had a problem, you would maybe take your chicken. If the problem is beyond the chicken, you'll take the goat. If it's not the goat, you take the cow. Today, in urban centers where we are, the goat, the chicken, or the cow is your car. That is a security. In some instances, if the problem is beyond the car, then you maybe would look into maybe a piece of land if you have one, or maybe you look into such things as security. But currently, security would mean that this is something that is that you've put in the case. So for our context, we give them loans that are bridging in capital. We bridge $1 million, then within 3 months you're able to clear it. Maybe you're waiting for a check to clear, things like that. So we've tailor-made solutions for our internal clients based on the history we have with them. Majority of our clients are repeat clients because we design products specifically for their needs. So if you're a contractor, you have employees, we have products designed for specific needs. So that is how security works for Ngao. But in generally, I think that is how security is in the financial sector. Claire?
Okay, thank you for that. As you said, a logbook or a parcel of land. But as you said, Richie, you have given an idea and they are willing to work with you. As they say, they are there to create solutions to your problem. So thanks for that. Annette, you can add on to that.
I think that was well answered. If I do add anything clear, I'll be diluting it.
Okay.
Yes.
Okay. Thank you for that. Now, I'd like us to wrap up this conversation. I have repinned the Ngao tweet there. So if you're interested, in getting some advice, if you'd like someone to talk to you, do click on the link pinned on this space on top there, and someone will get back to you. Just fill in the form and somebody will get back to you and assess your situation, your unique needs, and get the best for you. Now, I'd like us to close this conversation. It's been very interesting about borrowing and really figuring out where you are. And I think some of the things that have stood out for me are go for it. If you wanted that 300,000, stick to the 300,000. Don't take 500,000 just because you are able to qualify for that. And then just think of yourself, what are your needs? Are you able to repay before taking out that loan? Are you really able to repay? Don't just do things on a whim and then cry later. And then really doing your due diligence. Understand a legal perspective, then sit down. GAO has said that they are willing to sit with you and take you through that contract to help you understand any point of it that you may not understand, so that by the time you are putting or obligations are, and you're able to meet those obligations, and then you have a personal emergency and then money has to be used elsewhere, just communicate. If you're able to communicate, then probably you can reschedule the loan. But if you keep quiet and go underground, then you will have a contentious relationship. So I think that are coming in, I may not be able to read all of them, but do re-listen to this space. It will be available at the end of this space. You can go to the Citizen Digital page, that is Citizen TV Kenya page, and I'm sure GAO will also have it on their page. That's GAO Credit Limited, and you can re-listen and get these nuggets of advice. So I'd like us to close, and I will give Den an opportunity to start with your closing remarks on the whole matter of borrowing and wise borrowing.
Thank you so much, Claire. And also I'd like to thank the listeners and everyone who's joined us today. And there's one thing I'd want to reiterate that maybe we had not touched on. Before you get into the market, for you to partner with someone, kindly make sure that you identify a good lender. A good lender, you have first to start with their history. Know their history, know their reputation, get reviews. Previous clients can tell you what their history with them have been, how they've been doing, how their customer service has been. Are they consistent in the market? And do they give you a full disclosure of their terms and conditions? Because us as GAO, we have our full terms and conditions on our website. We give you a copy of a loan form. After you filled out an application, you go with it. Our customer center service also, that will also help you. So before you make any commitment, kindly make sure you do your due diligence. And thank you so much. Na karibu GAO. Thank you, Claire.
Thank you for that, Den. And what you've said about customer service is very important. It really determines how a relationship is, or if somebody even goes to a particular company, whether it's for a loan or for any other thing, that relationship officer is a very good thing. So thanks for pointing that out. I'll also give a chance to Sharon. Kindly give us your closing comments.
Sorry. To the listeners, I'll advise the following. Number one, work within the framework of the law. Always understand what you're getting yourself into. Whether that loan agreement is 100 pages, whether it is 50 pages, take time to clearly understand, read through so that you can actually get to know what you're getting yourself into. Number 2, consume what you can chew. If at all your ability to pay a debt is 1 million, don't go on taking 2 million or 3 million. It will actually have a negative impact either on your credit scores in terms of payment, your ability to pay and all that. So always consume what you can chew. Number 3, should there be anything you do not understand, always ask. Like get some time to ask what you actually, like, let's say the default clause. Read through the default clause, because that is where most people do not get to actually read through and understand. Ask about the penalties. Ask about the consequences of default. What are the processes? What happens if I default and all that? Because most legal matters that you end up dealing with, you'll get that maybe the clients did not understand the default clause. They did not get to actually read the agreements well. And that is why I'm insisting, before putting a pen down to paper, for you to understand. Thank you, Claire.
Okay, thank you for that. Really take your time to understand those legal documents before putting pen to paper. Now, I'm seeing Wycliffe and Annette have dropped off. I would like them to join to give their closing comments. Let me be sampling a few other comments and we see if they can join before we close this space.